we can also classify cost under purpose. Where purpose means it can either be direct cost or indirect cost. It can be direct cost or indirect cost. What is direct cost? What is direct cost? Yes.
Hello, sir.
Yes, please. Is it who is
Very,
speaking? Who is speaking?
very.
Very okay. What did you? Yes.
So direct costs are costs that are directly related to the production of a commodity. So let's say when you are producing what should I use? Bread. When you buy flour, it's a
Mm-hmm.
direct cost.
Mm-hmm.
Sugar, margarine, they are
Mm-hmm.
direct costs.
Mm-hmm.
Should I come to indirect?
Yeah, come to that. Yes. Yeah.
So when you pay the salary of a manager of the bakery, it's not a direct cost. But at the end of the day, they will all come into the total cost of producing the bread. I hope I'm right.
Okay, you are right, my dear. Let's hear from others too. What is the record in that record? Yes, you are right, Vero.
Hello, sir.
Okay, who is speaking?
Hello,
Anthony?
sir.
Yes, Anthony. Yeah, okay. Go ahead.
Yes, sir. Sir, please, when we talk of direct costs, they are costs which are easily traceable to cost of production. Traceable to
Example.
production.
Example.
Examples are, let's say, if you are in a manufacturing of cement, so the cost of, okay, let me use example. Let's say, production of biscuit. So
Mhm.
the cost of flour is a direct cost because you can easily trace the cost incurred in producing that biscuit, which is the flour.
Okay.
Thank you, sir.
Thank you. Any other place? Okay, so as they've said, Vero and then Anthony, they're all right. So direct costs are costs that can be traced to a cost center or cost unit. Direct cost is a cost that can be traced to a cost center or cost unit. What is a cost center? Cost center, for example, can be maybe the unit or the department. So let's say if you want to find out total cost incurred by HR department, right? So all the costs incurred under HR department become direct cost. We can easily trace it. We can easily trace it. If you want to find out about the total cost incurred by the, let me say, the marketing department, we can easily trace all the costs incurred by the marketing department, and that's direct cost. So all the costs that can be traced to that particular department become direct cost. But indirect costs are costs that cannot be traced to a particular cost center or cost unit, right? For example, uh, let's say the company has 5 cars, and these 5 cars, it can be used by any of the departments, any of the officers. So we can't say that at the end of the month, the fuel incurred for maybe Toyota A, okay, that fuel cost is incurred by only HR department. No, you can't say that it's incurred by only the HR department. It's a shared cost. So all indirect costs are called shared cost which is shared among all the other departments. Okay, because you can't trace to a particular department and that department caused that or incur that cost. Right. So let's say light bill for the building. The light bill, every unit uses light. So you can see that at the end of the month, the light bill incurred was caused by or also was incurred by the HR department only. No, the administration uses the light, the marketing uses the finance uses the HR uses and other units. That becomes indirect cost because you can't trace to a particular cost center or cost unit. Okay. We can also classify cost under behavior, the way the cost behaves. So under behavior, we have what's called fixed cost, we have what we call variable cost, we have what we call a semi-variable cost. Under behavior, we have what we call fixed cost, we have variable cost, and have semi-variable cost. Okay, what is fixed cost? What is fixed cost? Yes. What is fixed cost?
Fixed cost is a cost that remains constant to the production. Example like payment of salaries of staffs.
Yeah, who is speaking? That's Kingford, right?
Yes, sir.
Okay, any other explanation, please? Thank you very much, Kingford. Any other explanation? Fixed cost. Okay. What about variable cost? What about variable cost?
Hello, sir.
Yes.
Please, with fixed cost, is it fixed throughout or is fixed at some level? And as production rises, fixed cost also rises. It's not fixed throughout. So let me give an example.
So Veronica, come in again.
Fixed cost, is it fixed throughout? Let's say,
Are
because
you
you said,
asking a question or you are contributing?
okay, so let me contribute. I don't think fixed cost is fixed throughout. So at some level, it doesn't become fixed. It will vary at some level at some point.
So you are talking about semi-variable cost. That is a semi-variable cost. Fixed
No.
cost is fixed throughout.
Sir, are you sure?
Yes.
Yes. Fixed cost is fixed throughout. From the beginning to the end is fixed. It's the same amount. Okay, but variable cost, the semi-variable cost is partly fixed, partly variable. So some parts beginning is fixed, and as it's continued, like you are saying, then it varies. That will call semi-variable cost.
Okay.
Hello, sir. I want to ask a question in relation to that.
Yes.
Assuming we classify rent as a fixed cost and the level of activity increases and our rent at a point goes up, let's say a rent for a storage capacity, and as we produce in larger quantity, the rent increases. In that situation, is the rent going to be a fixed cost, a variable?
Come in again. Said assuming.
Assuming we have a rent that is fixed for the whole year. But there's a clause that when the level of activity increases, the rent will go up.
Okay.
And my question is, at that point, would the rent still a fixed cost or will be a semi-fixed cost?
It's a semi-variable cost. It's a semi-variable cost.
So how will you classify rent when you are preparing your house? Is it a fixed cost or semi-variable cost?
No, in the situation okay, let's discuss it.
So
Okay,
example, electricity.
Before we come to that, before we come to the semi-variable cost, let's go back to fixed cost. Let's give an example of a fixed cost. Let's start with a fixed cost. Example of fixed cost. That's one example of fixed cost. Yes.
Payment of staffs.
No, I disagree.
Hello.
No,
Yes.
the explanation of the fixed cost is that it does not change during the level of production of sales. So it's like a short run. So that is what we are supposed to get in mind before we start giving the examples and then creating the conclusion.
Okay.
Because it's not fixed throughout, it's fixed for like a certain period.
A certain level, yes.
Yes, at a certain period. So
even electricity cannot be classified as fixed costs.
Exactly, because electricity changes every month.
It can change as an answer because let's say, for example, in a class, let's say this class, MS Finance class, and then let's say we are doing face-to-face. So a class has a capacity of, let's say, 30 people with one lecturer. So the lecturer and the 30 students contain in one room. When the number goes beyond 30, and let's say we have 35, it means the class cannot contain the number of students in the class. It means we'll shift to the next class, which means that if you are using that class, electricity cost will increase at the end of the day. So electricity cannot be, under that circumstance, cannot be classified as a fixed cost. And then you will need another lecturer to teach the extra number of people. So you cannot even classify salary as fixed costs. I don't know if you understand me.
No, you can classify salary as fixed cost. Wait. depending on the period. For instance, if you are in a company and then the production that we are talking about is within a year, okay, salaries, we increase salaries of permanent staff when we have ended the financial year. I don't know if that what I'm saying makes sense. So until the next financial year, there's no way you increase your friend say your employees' salary. So when you are doing your calculations, you know that every month this is how much you are paying your permanent staff. It is fixed.
So what about the extra person you have brought?
No, you see,
Okay.
It is
So,
still fixed cost. It's just that fixed cost has increased. You understand? It is still fixed cost.
okay, Sandra.
that's what I'm trying.
Sandra and
Yeah.
Vero.
Yeah.
Okay. So let me come in small. Okay, to help the two of you to understand. Okay. When we say fixed cost, we all understand the concept of fixed cost means that the cost behave or that is the when there's a change in the cost. So when there's a change in the activity, okay, regardless of the level of activity, the cost will not change. So fixed cost is a cost that does not change, regardless of the level of activity. That one should be at the back of your mind. Now, fixed cost will never change. The cost remain the same from the beginning to the end. So you see, Sandra was telling you something that, for example, salaries, when within the financial year, if Mr. A is supposed to receive 10,000 Ghana cedis at the end of the month, okay, that is what we have. That is what we have recorded. That's what we have. That's what money have approved. So from January to December, this is the amount of money you are receiving, unless there is maybe some changes, right? So the period cost, the period that from January to December, you are receiving 10,000 is fixed. That cannot be changed. It can be changed. Maybe there are some conditions, right? Okay. So at the back of your mind, a fixed cost is a cost that do not change, regardless. Regardless means whether the activity level goes high or low. Whether it goes high or low, the cost will not change. Example. Let me give you a typical example. You see, let's talk about the mobile phone. You know, when you buy a SIM from MTN or Vodafone, okay. Let me use the meter fee. The meter fee. Now, when you get a bill, whether water bill or electricity bill, right? We have what's called the fixed cost. We have to call the variable cost. We have what's called the meter fee. Every month, everybody's paying meter fee. Assume it's 1 Ghana cedis. So within 2026, everybody's paying 1 Ghana cedis. So you can't say that okay, you finished your house and you apply for a meter and they gave you the meter, and then the same day you traveled and you came back the following year. So you're not paying a bill. You call meter fee, you pay meter fee for the whole year, whether you use the meter or not. That's what we call the fixed cost. That's what we call the fixed cost. Like your mobile phone, you see, you are supposed to have 1 Ghana cedi. You're supposed to buy airtime 1 Ghana cedis on your phone every month. If you don't know. So assuming you've traveled or you don't even buy any airtime. So after 2-3 months, they will see that your phone is not active and they will block and sell your phone number to another person. It's fixed. It's fixed cost. Whether you make a call, you don't make a call, you have to pay for it. That's what I mean by the fixed cost. Are you all clear with it?
Yeah, so
where I have the challenge is where you said regardless.
Yeah, regardless of the level of activity. That's why I gave you a typical example.
No, sir,
No,
you
that's
said
why
regardless of the level of activity.
whether the activity level goes high or not, whether you use it or not, I'm coming. Whether you use it or not, you have to pay the person. You have to pay for the cost. And I'm giving you a typical example, like the meter fee. Okay, now, do we have anybody working in maybe in the ECG or something? I'm giving you a typical example. Have you taken notice of your bill? Then how we call the meter fee? The meter fee.
When you say meter fee, I understand. But the electricity bill itself that will not be a fixed cost, right? The meter fee can be a fixed cost.
No, yeah, that's what I'm trying to say. Whether you use the meter or not, it's fixed.
You pay for.
You pay for it. You pay for that. That's the
But
fixed cost
the
I'm talking
bill
about.
that they will bill you.
No.
Okay.
We have not come to that. No, we have not come to the use.
Okay.
The use is the variable cost.
Okay.
The use, when you use
Okay.
it, the more you use, the more you pay. We have not come to variable cost. We are talking about fixed cost.
Okay. So like when you go for a Zoom Lion container, whether you use the container or not,
Or not, you pay
you
for.
pay for. But
Good.
if you go beyond maybe your capacity and they bring you extra, that's where you pay for. Though, okay, so I understand.
Okay. But the variable cost is the type of cost that changes with the level of activity. For example, the more you make calls, the more you pay for your airtime. The more you drive your car, the more you pay for fuel. You understand? So, like the classroom you're talking about, the more you increase the number of students, the more you pay for additional lecturers to take off the student. Okay, so the higher the activity, the higher the cost. The lesser the activity, the lesser the cost.
So in that case, salary can be a variable cost.
How? Explain that and less.
Because you are bringing, you'll be paying for more lecturers.
No, with the salary, it depends upon how you explain. That's why I say how. For example, if I'm receiving 5,000 Ghana cedis every month by my company, by company A. So company A in calculations, the fixed cost, that is my salary is 10,000 for the whole year. So from January to December, I know I'm receiving 10,000. See, you understand? It's a fixed cost. Okay, that's different from maybe I'm working and then we need additional hand. That become a variable cost. I hope you are getting my point.
Yes, sir.
That is why I use the metaphor to understand, so you understand it very, because that is practical. We all use water, and then we use electricity, so we pay for. Okay, yeah, and then even our mobile phone, we pay for. Now, do you know even your data, the data you buy, the data has two components. Every cost has two components. Too. It had a fixed cost and a variable cost. Every cost has two components. The data you buy, you bundle there's a fixed cost and there's a variable cost. Okay, there are two components. So that's why I explained that fixed cost is the cost that do not change regardless of the level of activity. But the variable cost, it changes with what? Activity level. So the higher the activity, the higher the cost. The lesser the activity, the lesser the cost. But semi-variable cost, semi-variable cost, the type of cost which is partly fixed and partly variable. That breaks in your example. Okay, so at the beginning is what? It's fixed. And as it continues for a short run. And then in the long run, it's what? It becomes what? It changes from fixed to variable. And that's called a semi-variable cost. Yes, somebody wanted to talk. Yes.
It's me.
Oh, Sandra.
There's
Okay.
Yeah, that's one thing I wanted to add for Vero to understand. Even with salaries, when you go to very structured companies, right, that we say that they will need additional hands. Some of them, the additional hands are something they have budgeted for in there because they know that this is a role they are supposed to fix, right? They are supposed to employ somebody there. So that even amount of money has been budgeted for a small part of the fiscal, just that they've not had somebody to fill that role yet. So that's what I'm saying, when you go to very structured companies, they budgeted for all the people that are supposed to fill roles in a certain department. So those fixed salaries are there. I don't know if what I'm saying makes sense.
Hello, Doc.
Yes.
Doc, please, I want to say something or ask
Okay.
something. So I think where the confusion is the change in fixed cost. So like Vero was saying, if a company wants to do an expansion, so they want to have a new apartment or a place and they rent. Now, that rent, does it change, does it become a variable cost, or the rent is still fixed cost, but there is a change in the amount, or there is a change in the fixed cost? So they have a place already, they want to expand.
Come again, please start again so that we understand you.
Okay. So I'm saying that a company, okay, in production, they have a place already, and then they want to expand their production. And so because of that, they rent an additional place. Now, we know that the place is a fixed cost. Now, when they add additional rent or when they rent a new apartment to their production, the new addition, does it become a variable cost or it is still fixed cost?
Okay, to the class. Okay, I believe you all got some.
The explanation we've gotten so far, it doesn't become a fixed cost anymore.
Okay.
Because it has varied because of the production.
Additional, exactly. So I'm happy.
The explanation we've been given this morning doesn't
Yes.
become a fixed cost. It has varied because
Okay.
outputs has increased.
You have added additional, yes. Kingsford, have you gotten it?
Yes, sir.
Okay.
Hello, sir.
Yes.
Okay, good morning. This is Gilbert.
Okay, Gilbert. Okay.
Yeah, what Emma just said, the confusion of whether a fixed cost goes over a period and it tends to vary. I learned per the definition you give, when an expense do not change, irrespective of, let's say, the level of activity. That's what we term it as a fixed cost. So as we were saying, the rent, assuming you go for an apartment, and let's say the cost for rent for a year is 5,000. It doesn't matter the number of people who come to occupy the building, the rent is still fixed. In the same vein, when we take, for instance, you have a car, and you have to pay an insurance premium. The insurance premium remains fixed for the entire 12 calendar, let's say, year. Same as a roadworthy certificate. Either you drive the car or you don't drive the car, you still have to pay those costs. So we term that as a fixed cost, irrespective of the level of activity, whether you rent and you produce beyond, let's say, the maximum capacity, still the rent is fixed. So as Iman was saying, you go for rent, and let's say because your production levels have increased, and you need, let's say, extra space, let's say a warehouse. Warehouse rent is a fixed cost. But in a situation whereby, let's say your production levels goes beyond, let's say, the maximum levels to contain by the warehouse, and you need extra space, then you go for another, let's say, rent. So that's why we now term it as, let's say, it is varying. So there we don't term it as fixed cost, but we have to carry it over to the semi-variable cost as you were stating. Thank you.
Thank you for the explanation. I believe you all got it. Okay, so let me also go over what, because I was about to say what you said. So you rent an apartment, and you alone rent the apartment, and it says it's 10,000 Ghana cedis. Let me say every month, and that apartment you've rented, you brought in your brother or your sister to join you. Okay, the landlady will not say that, oh, you brought in additional person to stay in the room, so I'm increasing the rent. No, it is the same amount of money you pay until the period ends, right? That is what he was trying to say, which is the same thing I was trying to say. Okay, become fixed. Okay, in the case whereby, you have a company and you are producing, and then you need maybe the space for the production, or the production center is too small because you've gotten additional materials to work on, so you need additional space. Bringing the additional or going for additional or renting additional space, okay, becomes the semi-variable, because you are increasing the activity. At the beginning, it was fixed, and now it has turned to what? Semi-variable. Okay. Now, the next one also bring after that, you also bring in additional space. If you need additional space, it also becomes additional cost. The cost will increase. The cost for the rent also will increase because you are renting more than one room. Okay. But for one room becomes fixed from the beginning to the end. Okay, that was it. So please don't be confused. So don't be confused with these two things. Okay. So at the back of your mind, what you should be able to understand is that for fixed cost, it's always the cost is always fixed. It remains the same regardless of the level of activity. For semi-variable cost, the cost is partly fixed and partly variable. Okay. Okay. We don't say we don't say semi-fixed cost. No, we say semi-variable cost. Why are we saying semi-variable cost? Because at the beginning it's fixed, and as it proceeds or continues, it becomes what? Variable. It changes from fixed. That's what we call the semi-variable cost. And then we have the variable cost. The variable cost, the cost changes as the activity level also changes. The more or the higher the activity, the higher the cost. The lesser the activity, the lesser the cost. That is how cost behaves under this classification. Okay. Then you have the function. We can also classify cost under function, like the cost incurred by the production units, as I explained to you at the beginning. Marketing, administration. Okay. Then management reporting systems. Okay. What are the management reporting system under cost classification? We have what's called controllable cost. We have non-controllable cost. What is controllable cost? What is controllable cost? Yes. And what's non-controllable cost? Yes.
Kwanzi speaking.
Yeah, Isaac.
Yes. For controllable cost, there are costs that you would incur in the department or an organization where it's within control. That is, you can manage it, such that you don't even overspend. But uncontrollable.
Example.
Oh, let's say sanitation, right?
Okay.
Once it is your budget for the year is 12,000, you are expected that on a monthly basis you spend 1,000 for the rest of the period, so that you hit the 12,000. But we have instances where the cost is such that it is not within your control. That is outside your control. In that case, you can regulate it.
Okay. Any other, please? Any other explanation? Okay. So controllable costs are costs that can be controlled by management. Example. Let's say, for example, every unit in the department or every in the organization or the department with this organization, there's a printer. Every department has a printer, and management has noticed that the cost of printing is too high. So management may control it by saying, okay, they take every printer from every office and then use what's called centralized printing room, whereby if you want to print, you print from a centralized room, because everybody is printing anything and is including cost. Then they can also decide that, okay, we are giving every unit maybe 2 boxes of A4 rims. So for every month. So if you finish your 2 rims within a month, it means you have reached your limit. And then any additional A4 rim or any additional printing you want to make will be additional cost to the department. Okay, if they do that, they'll minimize cost. All right, they'll be able to manage cost. That is, they're able to control the cost of printing. It comes at the controllable cost. The non-controllable cost. So, for example,
so if those ones. Oh, okay.
Vero?
Yes,
Vero?
sir.
Yes,
sir. I wanted to talk about the non-controllable.
Okay. Non-controllable cost, yes.
Those ones you cannot do, like statutory payments.
Exactly.
Those ones.
Example.
Like, let's say property rates. Those ones, if the assembly come and they've assessed your property and this is how much you are supposed to pay, there's nothing you can do. You have to pay.
Exactly. Any other, please?
Yeah,
yes, please.
Yeah, the other example can be corporate insurance allocated to departments.
Corporate
insurance.
Okay.
Allocated to various departments.
Okay.
So that one too is directed by anybody.
Yeah.
Yes.
Yeah. Any other? So and another example, for example, you are then and the government, they announced that they increase tax to maybe 10% increase of tax. You can't control it. It's the government. Come from the outside organization. Okay. All right. So let's go straight to okay, I've already explained this one, so we don't need to waste time on this. We talked about this one already. Yeah, fixed cost and other rates. Yeah, rent, rate insurance, we talked about this thing already. We have discussed it. Okay. Contribution analysis. So contribution analysis is based on the premise that in almost any decision-making situation, some costs are irrelevant. That is, they are not affected by the decision. So when we say irrelevant costs, means that the cost doesn't affect any decision. Okay, they can therefore be ignored. In such circumstances, management should concentrate on the contribution that a project may make. So contribution, that is C, is the difference between the sales revenue of a project, and the variable or extra cost incurred by investing in that project. Let me go over again. Contribution is the difference between the sales revenue of a project and the variable or the extra cost. Okay, we are saying the variable extra cost because we already explained the variable cost. Okay, incurred by investing in that project. So other things being equal, as long as selling price minus variable cost result in contribution. So we are saying that the contribution is equal to what? Selling price minus what? Variable cost. Selling price minus what? Variable cost. Okay. And this is the break-even chart. So break-even chart, we know the sales, okay, and then we have our activity level, okay. We had the sales, we had the activity level. So we know the variable cost. Talk about the higher the activity, the higher the sales, right? Okay, so the higher the cost. We have sales and cost, okay, and then the activity. So the more you sell, the more you get the money, right? The more you produce, the more you incur the cost. Okay, all right. Now we call something margin of safety. Okay, and we had a break-even point. We don't know what's the break-even. What's the break-even? What is the break-even? Yes, what's the break-even?
So is the point at which there is no loss, no profit made.
Okay, so we are saying the break-even is a point where there's no loss or what profit. That break-even. So, for example, if total cost of producing a mobile phone is 10,000 Ghana cedis, and then we have produced this phone, and we are selling this phone, and then right, we produce about 10 phones, and we are selling them, and we've sold about 2. So we got 10,000 Ghana cedis. At that point, we can term that what break even, because total cost of production 10,000, and total sales we made is 10,000, right? So after break even is where we get our profit. It means whatever we sell after making the break even becomes our profit. I believe you all got it. Okay. What's the margin of safety? Margin of safety. Margin of safety, please.
Yeah, hello, Doc.
Yes.
Yes, margin of safety measures how much sales can fall before a business reaches its break-even point.
Hello, please. We can't hear you well.
Hello?
Yeah, you said what?
Yes, I say margin of safety measures how much sales can fall before a business reaches its break-even point. Like how much sales can fall.
Okay.
Yes.
Okay. Any other explanation, please?
Okay, Doc.
Okay.
It represents the amount by which sales can drop before business begin to lose money or make a loss.
So it represents
the amount by which sales can drop before the business begins to lose money.
Okay. All right. We've talked about fixed costs, we talk about variable costs. So, all right. Let's go straight. Okay. Now, the concept of contribution. We said total contribution is sales minus variable cost. So contribution per unit is equal to selling price per unit minus variable cost per unit. So our format is revenue. Okay, we do this one from the business maths, where to arrive at profit. Okay, if you want to make a profit, all right, maybe you went to Makola to buy some product, right? And then the cost for those products, let me say 10,000 Ghana cedis, and then that's the cost incurred, right? So your total cost incurring for that product you bought is 10,000 Ghana cedis, and you want to make profit out of the 10,000 Ghana cedis. It means when you have to add your profit to your cost before you can get your selling price, before you can sell it, right? So you can't sell you can't sell that particular product below 10,000 Ghana cedis. It should go beyond 10,000 Ghana cedis so that you be able to make profit, right? So you are saying revenue, you less the variable cost, or you less your cost, and then get a contribution. And then when you get a contribution, somebody will say gross profit, right? Then you less your fixed cost to get your profit, right? So with the revenue, talk about the sales, total sales you're going to make, total sales made. Then your variable cost, that is the direct cost, the cost incurred for producing that particular product, right? Then you get your contribution. Then your fixed cost. Fixed cost talk about, I believe you all know the fixed cost. So regardless of the level of activity, is fixed. So you have to less your fixed cost, and then you get your profit. So let's take an example. Assuming you are producing product A, B, C. For product A, total sales revenue is 100 Ghana cedis, right? And then the variable cost incurred 35 Ghana cedis. So our contribution is going to be, you less your variable cost from your sales, which is 100 Ghana cedis, to get 65 Ghana cedis. 65 Ghana cedis become your contribution for product A. And that of B is 120 less 68, you are getting 58. So you're getting 52, 52 Ghana cedis as your contribution, or somebody will say your gross profit. Then for product C, the sales made was 80 Ghana cedis, and then the variable cost was 70 Ghana cedis. You less it from 80 Ghana cedis, you are getting 10 Ghana cedis as your contribution. The same thing applied to this, like the previous ones we did. So let's go straight. And the same thing to this one. Okay, we have your sales of 50, this per unit, 50 Ghana cedis. Your variable cost is 38 Ghana cedis. So definitely your contribution is going to be 50 minus 38, and that'll give you 12. That will give you your contribution. Okay. All right. Now let's take this formulas. Let's take note of this formula. It's very, very important, because that's where we're going. So in solving your break-even analysis, you can either go by the graphical method, you can go by the formula method. Okay, you can either go by the graphical method, you can go by the formula method. The formula, these are the formulas you need to solve your break-even analysis. So variable cost to sales ratio is variable cost divided by sales. So in a question, I may ask you a question to find the variable cost to sales ratio. I mean, you have to lift your variable cost divided by your sales, and that will give you your variable cost to sales ratio. Then contribution to sales ratio is 1 minus variable cost to sales ratio, or contribution divided by sales times 100. That is the formula. They have contribution. To find your contribution, the formula is sales minus variable cost. So in the question, you'll be giving your sales, you'll be giving your variable cost, and you're going to use this one to find your contribution. All right. You may also be asked to find the break-even in value. Break-even in value. The break-even in value means break-even in amount. That is your fixed cost divided by, the formula is fixed cost divided by contribution to sales ratio. Then break-even in quantity, that in units. That is, the formula is the break-even in value divided by the selling price. The break-even in value divided by the selling price. They have sales to earn a target profit. So if you want to find out about the target profit made, the formula is maybe you target a profit of 10,000 Ghana cedis at the end of selling your product. The formula is fixed cost plus profit divided by contribution to sales ratio. The margin of safety in value, the formula is sales minus break-even in sales. The margin of safety in percentage, that is the margin of safety in value divided by sales times 100. Let's take an example. Example, Vodafone Ghana produce a product called Yaya. The following information relates to the company's product. So selling price is 500 Ghana cedis. Variable cost per unit is 400 Ghana cedis. Total fixed cost is 400,000 Ghana cedis. And the target profit is 100,000 Ghana cedis. You are required to find a break-even point in units, break-even point in sales, the quantity of goods to be sold by the company in order to make the target profit, the value of sales that will result in the target profit. So we've given the information given to us are the selling price, the variable cost, total fixed cost, and target profit. Remember, the first step is to find your contribution, right? And we know from the formula, contribution is equal to what? Selling price minus variable cost. So 500 minus 400, it will give us 100. So the 100 is going to be our contribution, right? Okay. Now the question is to find the break-even point in unit. Okay. So we know to find the break-even point in unit, the formula is fixed cost divided by contribution per unit. Fixed cost divided by contribution per unit. Our contribution per unit, we have to find the contribution per unit, which is the selling price minus variable cost. That is 500 minus 400 will give you 100. So now to find your break-even point in units, in the question we have been given the fixed cost to be 400,000 divided by the 100, and that will give 4,000 units. That is the break-even point in units. Let me go over again. Okay, let me go back to the question. These are the information given to us. We'll be given the selling price. We have been given the variable cost. We'll be given the total cost and then the target profit. And the first question is to find the break-even point in units. And the formula for finding the break-even point in units is equal to fixed cost divided by contribution per unit. Now we don't have contribution per unit in the question, so we have to find the contribution per unit. That's the first step. So the contribution per unit is equal to selling price minus variable cost. In the question, the selling price is 500 and the variable cost is 400. So 500 minus 400 will give you 100. So the 100 becomes our contribution. Now we substitute this value into the equation. So our break-even point in unit is equal to fixed cost divided by contribution per unit. And the fixed cost is 400,000. So it's 400,000 divided by 100, and that'll give you 4,000 units. So our break-even point in units is 4,000 units according to this question. To find our break-even point in sales, we multiply the selling price by the break-even point in unit to get our break-even point in sales. It's simple. So the 400,000 times the 500 will give you 2 million Ghana cedis as our break-even point in sales. Or you can go by this formula. The fixed cost divided by contribution per unit times the selling price. It's the same thing. We've already done the fixed cost divided by contribution per unit already for the break-even point in, so we don't need to repeat that one. We just multiply whatever we have gotten by the selling price to get our break-even point in value. The next question, we're asked to find the target profit. And the formula for finding the target profit is equal to fixed cost plus target profit divided by contribution per unit. So the formula for finding the target profit is equal to fixed cost plus target profit divided by contribution. Please take note that this kind of this type of topic involve formulas. So these formulas, you are supposed to know them. Okay, and I don't think they are difficult. Okay, so they are supposed to know them so that you can apply them, because you have a question under this. Okay, for the end of term. All right. So our fixed cost is 400,000 plus our target profit is 100,000 according to the question, because the target profit was given from the question, and your fixed cost was given from the question. But our contribution per unit, after our calculation, we got 100. So 400,000 plus 100,000 divided by 100 will give you 5,000 units as the target profit in units. Now, the level of sales at the target profit, just multiply this by the selling price, like as we did for the breaking point in unit to the breaking point in sales. And we're getting That is 2.5 million Ghana cedis as our level of sales at target profits. Very simple question. Very, very simple question. Any question before I proceed? I'll pause here. I'll pause for 2 minutes, and if there's no question, I continue.
Sir,
Yes, please.
this formula you are supposed to know. I wanted to ask if it also be added to the formula sheet.
Yeah, it's better the formula, but I'm trying to let you understand that you are supposed to know. If you don't know and it's in the formula sheet, how will you know? How will you know that this is what I need? You understand it? So you are supposed to know. You are supposed to know. All right, let's continue. Let's solve another question. Okay, let us all try this. Please write the formulas down. Please write the formulas down, and then you try it. I'll give you 7 minutes to try it. Write the formulas down. That's the break-even point. We said the contribution is equal to selling price minus variable cost. Please write it down. Contribution is equal to selling price minus variable cost. Then break-even point in unit is equal to fixed cost divided by contribution per unit. Break-even point in unit is equal to fixed cost divided by contribution per unit. Right? Please write it down. Contribution is equal to selling price minus variable cost. Break-even point in unit is equal to fixed cost divided by contribution per unit. Break-even point in sales is equal to break-even point in unit times selling price. Break-even point in sales is equal to break-even point in unit times selling price. Please write them down. Okay, I'm going over again. Contribution is equal to selling price minus variable cost. Break-even point is equal to break-even point in unit is equal to fixed cost divided by contribution per unit. Break-even point in sales is equal to break-even point in unit times selling price. Number of units at target profit. Number of units at target profit is equal to fixed cost plus target profit divided by contribution per unit. Number of units at target profit is equal to fixed cost plus target profit divided by contribution per unit. Level of sales at target profit is equal to number of units at target profit times selling price. Level of sales at target profit is equal to number of units at target profit times selling price. Okay. So with these formulas, please solve this. You find the breaking point in unit.
Sir, please can you come back again? I want to see the last one.
I said it's saying contribution is equal to selling price minus variable cost. And then break-even point in unit is equal to fixed cost divided by contribution per unit. Then break-even point in sales is equal to break-even point in unit times selling price. Then I came to number of units at target profit is equal to fixed cost plus target profit divided by contribution per unit. Number of units at target profit is equal to fixed cost plus target profit divided by contribution per unit. The level of sales at target profit is equal to number of units at target profit times selling price. Use these formulas to solve this question. I've given the variable cost per unit, the selling price per unit, total fixed cost, right? So I'm giving you find the break-even point in unit, and then find the break-even point in sales. Okay. And then find the target profit in unit and the target profit in sales. So that then we continue. I'm giving you 7 minutes. Well, let me say 10 minutes. It's 9:14. So 9:24. We continue. Try it. Solve it. Please, someone finish?
Yes.
Okay. Okay. So what was the break-even in units?
Break even in units, I have 600.
600. Okay.
Yes.
Yes.
Sales value at break even point, I have 720,000.
Okay.
Then CS ratio, I have 33.33.
Okay.
Yes, sir.
Okay. Then the target profit? Okay. All right. So let's do it together. So we had a contribution per unit equals selling price minus variable cost. So from the question, our selling price is 1,200 and our variable cost is 800. So our contribution per unit is 400. Can I see this per unit? The break-even point in unit is equal to the fixed cost divided by contribution per unit. So in the question, the fixed cost is 240,000 divided by 400, making 600 units. So our breaking point in value is the 240,000 times the selling price, which is 1,200, making 720,000. Okay? All right. Very simple. Then the contribution to sales ratio. Contribution to sales ratio simply means contribution per unit divided by selling price times 100. That's all. So the contribution is 400, selling price is 1,200 times 100. That will give you 33.33%. The unit for target profit. Unit for target profit is fixed cost plus target profit divided by contribution per unit. So our fixed cost is 240,000, and then our target profit from the question is 60,000 divided by 400, making 750 units. 750 units. Then sales for target profit is the unit for target profit times the selling price. So 750 unit times the $1,200, and that'll give you 900,000 Ghana, $1,000, $900,000. $900,000. Very simple. So as I told you, this type of the concept involves a lot of formulas. So just be familiar to the formula. That is all. Just be familiar to the formula. And then you apply them accordingly, according to the questions. Okay. Okay. So in the question, I'm going back to the question. The question we have to find then the last one we have to prepare a statement of profit to show the profit of the company where the quantity in I above is produced. So the statement of profit. So a statement of profit is called our sales is the 750, right? Times the 1,200. Someone will say, how do you get the 750? In our calculations, the 750 unit is the target profit. So if you want to achieve a profit of 60,000, we have to sell unit of 750, and the selling price is 1,200. So total sales is going to be 900,000. If you want to reach a profit of 60,000, then we less our variable cost. So our variable cost, all right, that is 750 sales we want to sell, and the cost, and then the 800 is the variable cost. So 800 times the 750, gives 600,000. Less 600,000 from 900,000, you're getting 300,000 as your contribution. Then less your fixed cost. The fixed cost from the question 240. So our net profit is 60,000. So this is the statement of profit according to the question. Statement of profit. Our sales less variable cost, you get your contribution, less fixed cost, you get your net profit. Get your net profit. Okay.
There,
Yes.
I have a question.
Yes, please.
There's the CS ratio.
Okay.
I'm trying to make sense out of it because the contribution is in units, the selling is in cedis. So how did they cancel out to get a percentage is what's making me confused.
The contribution per unit.
Yeah, the contribution, the is in units, right? And the selling price is in cedis.
It's in dollars. It's in dollars.
It's in dollars, yes.
Yeah.
It's not about the currency is how we got a percentage out of it. Yes, I know you are multiplying by 100. What I'm saying is that this one, the contribution is in units. This is the selling price is either cedis or dollars, whatever the currency may be. How did they cancel each other out so that the percentage becomes what is attached to the final answer?
If you are doing this, you don't consider the unit. Like we did for the contribution. Is the contribution is equal to what? Okay, when you're doing this, I don't consider the units. Okay. Contribution per unit. Okay. The other side, you are only looking at you want to look at the magnitude, the level, right? The percentage. You are not looking at the unit. That is not the figure you put it. It's the figure you lift, and then in percentage, what is it? That is all about the contribution to sales ratio. Yeah. That is why at the end of the results, we didn't consider the unit in the that is the dollar, and then that of the other units, but we only consider the percentage. Okay, so those are not important here. We are looking at. We are only looking at the percentage. That is all. So those units are not relevant here for us.
Hello, sir.
Yes.
But the contribution sales ratio, I think there's also another formula for it.
Yeah, the other formula for it.
Selling price per unit minus variable cost per unit over selling price. Still the same thing.
You get the same thing, yeah. You get the same thing. Yeah.
So that will not bring the that Sandra was.
Yeah.
I think that one solved that issue.
Yeah. You get the same thing. You know, most of you are not accountants, so I didn't want to go into a lot of things. Okay, get the simple one for you to understand it because you are managers. And then you get a concept and then we move on. All right.
So, Doc.
Yes.
So I would say that contribution is basically gross profit.
Yes. Contribution is basically gross profit. We will do more in our next topic. We will do more on the contributions and those kind of things in our next topic. That is, you're going to apply them to the income statement when you do the marginal costing, then absorption costing techniques.
So, from the beginning, I asked a question of like doing nothing, whether you can still incur costs, and say you explain further. It's like you've not done, you've not answered my question.
You said doing nothing, yes. Yeah, that's we've explained that one. Remember, we talked about fixed cost, and I gave a typical example. For example, the meter fee. You bought a meter from maybe ECG or maybe the water company, and they fix it for you in your house, and you travel. You have not even used it at all. You travel the same day. When you come back, there's what's called a meter fee. You have to pay every month. You have to pay for the meter fee.
My question is, I wanted to ask this question based on maybe you have a manufacturing firm and all workers has been laid off. Maybe we run in difficulties financially, and then you see the building, the building is there, the plants and equipment are all there, everything is. Can you say incur costs in that situation?
Yes. So if you are renting,
so in that situation, is it a fixed cost?
It's a fixed cost.
Like nothing is being done.
We know rent is fixed cost. So it's a fixed cost. You pay for the rent, whether you use or not. You pay for the rent.
Oh, okay.
It's a fixed cost.
Okay.
Let's take another typical example. We all experienced COVID, right? COVID-19. So during COVID-19, everybody was asked to go home, stay home, and then some were working from the house, some were not working from the house, right? You still pay for your workers, you pay for their salaries. You understand? You can't say that, okay, because they are not at work, you not pay them. You still pay for them. That is why most of the times it's important to consider. So companies must use the managers, or let me say finance officers or the accounts officers must come up with strategies to cushion the company in case of crisis like this. Okay, salary is rate. It's fixed cost. You pay.
So say, example, when somebody goes on, let's say maternity leave,
Okay.
you still go ahead and pay the person, though the person is home and not working.
Exactly. You still pay the person. Okay. And do you know we have paternity leave?
Yes.
You know we have paternity leave. I
Yes.
I experienced it when I traveled to India. I was teaching statistics. So with one professor, he was teaching the masters and some groups. I also teach some groups. So my co-professor wife got maternity leave, and he also applied for paternity leave, and he was granted. He was approved. So I had to take his class. That was the first time I heard about paternity leave.
But not in Ghana here.
No, Ghana, they will not give to you. Oh,
So some private companies do it. I
Oh,
know
Ghana,
some
there
private
is
Oh,
some.
sir, they do. My
They
husband has
do.
taken paternity leave before. They do.
hey,
Yeah,
wow,
they
that's
do it in
fantastic.
Yes.
But say, I also
Yes.
know of a private. I've worked with a company before. That company was giving paternity leave to fathers, guys whose wife have children.
Wow.
Yeah,
It's a
they
private.
do.
Yes, I've
As
worked with
equal
them.
as the women, the same months, like 4 months. So
Oh no, my own is just
yeah,
a
my own is like that.
Oh
The
no,
paternity leave is just
at my
5
place
days.
it's just 1 week.
No, it's not
It's
5
just
days.
5 days.
It's 5
It's,
days.
For
mine was
paternity
not
leave,
5
it's
days.
just 5 days. The woman you are
Some
taking 3
companies
months,
don't
4
give
months.
5 days. Yes.
It's 1 week. 1 week.
No,
It
my own
was
there
two.
was
My
not 1
own,
week.
the company gave 2 weeks. It was
Okay.
giving 2
It depends. It
weeks.
depends upon the company. It depends upon the company
Yes.
policy. So that one there, it's possible that they can give. Okay, so this brings us to marginal absorption costing techniques. Marginal absorption costing techniques. Okay, so we are going to use this one technique to prepare our income statement. So after studying this chapter, you should be able to explain the difference between absorption costing, and you can call it full or total cost, right? Total costing or full costing, okay? And a variable costing system. Prepare profit statement based on variable cost, so we refer the marginal costing as well as variable cost. So take note of, these are some of the things you need to understand. Prepare the marginal costing as variable cost, and then an absorption costing system. Explain the difference in reported profit between variables and absorption costing profit. So once you are using two different methods, there'll be a difference in the profit, and they should be able to explain it. Okay. For example, if somebody is working in US, the person is receiving dollar, right? So you can see that $200 is equivalent to 2,000 Ghana cedis here, right? $200 is equivalent to 2,000. Okay, so the value is the same. Explain the argument for and against variable and absorption costing. All right. Okay. So the period cost and product cost. Product costs are those that are attached to the product. What is the product cost? What is the product cost and what is the period cost? What are the difference between period cost and product cost? Yes. Let's discuss this one. What is the period cost? What is the product cost? Yes.
I say that product costs are costs that are directly related to the product. Example is maybe
Example.
Example is yes, maybe let's say Richoku. I'm producing Richoku. The raw materials that we use to produce the Richoku, let's say cocoa, milk
Okay.
powder, and
Okay.
then the labor involved, product costs.
Okay. What about period cost?
So is it the same as direct cost?
Yeah, the product costs are the same as the direct cost. Yes.
Okay.
Excellent.
Okay.
Please, we are coming out with some terminology, so take note of those terminologies, okay? Okay, all right. What about period cost?
So are they the same as overheads? Because
are you asking a question or you're explaining, please?
I think they're the same as overheads. Yeah, the period cost.
Overheads.
Hello, Doc.
Yes.
Okay, I would say they are costs that are tied to a specific time frame rather than the direct manufacturing process.
Okay.
Example, the advertising for a product.
Okay.
That cost could be, let's say, 1 month or 3 months.
Okay. All right. Thank you. So we come to marginal costing. We are starting with marginal costing technique. Then we go to absorption costing technique. So marginal costing may be defined as a cost accounting system in which variable costs are charged to cost unit. Take note, marginal costing may be defined as cost accounting system in which variable costs are charged to cost unit. The cost unit you're talking about the product cost, and fixed cost of the period are written off, and fixed cost of the period are written off in full against the contribution for the period. So we know the contribution. We know contribution is our gross profit, right? So we don't consider it before arriving at the contribution. We say that the marginal costing may be defined as a cost accounting system in which variable costs are. So we are saying that the marginal costing, we consider variable cost as total cost of production as the product cost. We consider as product cost, right? We don't consider fixed cost as part of the product cost. The main difference between the marginal costing technique and the absorption costing technique is that marginal costing only consider variable cost as total cost of production. It doesn't consider fixed cost as part of cost of production. But with the absorption costing techniques, considers both fixed and variable cost as total cost of production. But marginal costing says that variable cost is the only cost of production, or is the total cost of production. This is the main difference. So all these are reading. Let's go straight to the format. So the format for preparing the marginal costing technique. So we have sales. You should have 3 columns, right? And then sales. Sales, we know the sales, right? If selling price per unit is 100, and total sales made is also 100. So total sales is going to be what? 100 times 100, right? We'll give you total sales. All right. Then you less variable production cost, or you can say variable cost of sales. The variable cost of sales are the direct materials cost, the labor, the direct labor, direct expenses, the variable production overheads. Then, when you add all this, you get what's called the total cost of production. So total cost of production, okay, total cost of production that the marginal costing are direct materials, direct labor, direct expenses, variable production overheads. Then you let total production cost, right? From less total production cost, okay, from sales. And if you have opening stock, you add it. If you have closing stock, you less it. What is opening stock? I think the last time we talked about opening stock and closing stock, right?
Yes, sir.
Yes,
We
sir.
talk about so then you if you have opening stock, you add the opening stock to your total cost of production. If you have your closing stock, less closing stock from total cost of production, okay, to get your cost of goods sold, then less cost of goods sold from sales, then get your gross profit, or you say contribution. Then less your expenses, okay. What are the expenses we are talking about here? Actual fixed manufacturing overheads, variable selling and distribution expenses, fixed selling and distribution expenses, net profit. Okay, so any other cost apart from direct cost of production are considered as fixed costs. Yes.
Oh, sorry, before you proceed. The total production cost.
Total
production cost here.
Okay.
It has to be less. So is it is it going to be a negative, or because you've seen here in the format it's a less total production cost?
Yeah.
So which means, is it supposed to be in bracket negative, or we should just add the opening stock from it down? Let's do it.
Oh, bracket negative. Yeah.
It's supposed to be in bracket negative.
Yeah, bracket negative.
Okay.
Yes.
All right.
Okay. Okay. Explain this one to your people. Let me explain this one to you. You see, in accounting, some of us are not accounting students. So in accounting, when you see a figure in bracket means it's negative. We are less than it. So please, those of you who are not accounting students, take note of that. So when you see a figure, okay, in bracket, it means it's negative. It means we are less than it. That's the meaning of that. Okay. So take note of that. Let's take an example. So calculate the net profit of Awosu Limited from the data given below. Calculate the net profit of Awosu Limited from the data given below. So you have sales, 2,000 units at $100. So total sales made was 2,000. The company sold 2,000 units, and each of them was sold at $100. Total production was 3,000. The company produced 3,000 units. Fixed factory overhead, $15,000. Direct materials, $15 per unit. $15 per unit. The per unit we are talking about, is it per unit of production or per unit of sales?
Per unit of production.
Excellent. Direct material, the direct labor, $30 per unit. The variable factory overhead, $20 per unit. Selling and distribution, $20,000. Advertising overhead, $15,000. Okay. So we may ask, this is the solution to our question. So every income statement should have a heading, and the headings should come from the question. The question says Awosu Limited income statement. So Awosu Limited income statement for the year ended 31st December 2020. Remember, your financial statement is for a year, right? So the period the year should be, or the period should be indicated in the heading as part of your headings. So it's 31st December 2020. All right. Okay. And you have 3 columns. So the first column is the sales. So 2,000 times the 100 will give you 200,000. So total sales made of $200,000 for the period. Your less marginal cost of sales. And under the marginal cost of sales from the question, you have direct material, $15 per unit. So per production. So 15 times 3,000 give you 45,000. 30 times 3,000 give you 90,000. Right? Variable overheads, 20,000 times 3,000 give you 60,000. So when you add 45,000, 90,000, 0,000, you are getting 105,000. Okay? So you less closing stock. Okay. How do you arrive at the closing stock? We produced 3,000, and then we sold 2,000. It means we still have 1,000 left, right? We want to find out about the cost for those 1,000. The 195,000 we are seeing here is total cost for producing the 3,000. But we can't consider this 185,000 to arrive at our profit because we didn't sell all the 3,000. Take note. So we have to subtract, and account. So you have to less. We don't say subtract. We say you have to less. But I'm using our normal mathematics term. Subtract, right? The ones left, the ones we still have in our shop, from the one we have sold, so that we can know the actual profit we have earned. So to find the cost for the 1,000, and then we say we produced 3,000, and then we sold 2,000. So 3,000 and 2,000 give you 1,000. So the formula is the 1,000 left divided by total production times the 185,000, and you're getting 65,000 as the cost for the closing stock. So let the closing stock from the 185,000, and you're getting 130,000 as our total cost of producing the 2,000 units, not 3,000 units. Then less your 130 from the 200,000 to get a 70,000 as your contribution. That's your contribution. Okay. or your gross profit. Then you less fixed cost. From the question, we have fixed factory overhead, which is 15,000, selling distribution overhead 20,000, administration overhead 15,000. So you add these three, you're getting 50,000. Then you left from 70,000, getting 20,000 as our net profit. I'm going over again. Let me go over again. This is the question given to you. Calculate the net profit of Awosu Limited from the data given below. And in the question, we've been given the sales that 2,000 times $100. Production, 3,000. Fixed factory overhead, 15,000. Direct materials, $15 per unit. Direct labor, $30 per unit. Variable factory overhead, $20 per unit. Selling and distribution, that's $20,000. The administration overhead is $15,000. Okay. So we should have three columns. And then in the first column is the sales. You have the sales, that's 2,000 times 100. You're getting that 200,000. Then the less marginal cost of sales, you have the direct material, 15 times 3,000, giving you 45,000. Then direct labor, 30 times the 3,000, giving you 90,000. Then variable overhead, 20 times 3,000, giving you 6,000. So when you compute it, you are getting 195,000. Okay, then let's closing stock. Okay, and how do we got 1,000? We said that 3,000 total production, you less your 2,000 as your sales. Okay, so 2,000 from the 3,000 give you 1,000, right? So 1,000 divided by 3,000 give times the 195,000 will give you 65,000, right? All right, so 65,000 less from 195,000 give you 130,000. So 180,000 from 200,000 give you 70,000 as your contribution. I'll pause here before I continue. Any question, please? This is a format. When we say format means it's a principle. You must follow this principle. You cannot bring the direct material to after contribution. It makes your solution wrong. Okay. So all the variable costs will come first before you get a contribution. Then let your fixed cost get your net profit. That is the format for the marginal costing. You have your sales, you less all your variable costs. You add all of them. Then you less if you have a closing stock, you less from your total cost of production before you less the result from your sales. You have the opening stock, you add to total cost of production, then you less from your sales to get your contribution. Okay. Or somebody say marginal profit is the same thing. Then less your fixed cost. When the question is the fixed cost, you have the fixed factory overhead, 15,000. You have selling and distribution overhead, 20,000. You have the administrative overhead, 15,000. When you compete, you get 50,000. Less 50,000 from 70,000, you get 20,000. That's your net profit. I'll pause here. If you have any question before you continue.
So, Doc,
Yes, please.
can you go back for the closing stock?
Okay.
Yes, I've seen here you put like 1,000 divided by the 3,000.
You said?
Let's the closing stock figures, I mean.
Mm-hmm.
So this 1,000 and the 3,000, yes, that's what I wanted to explain.
And the one time, okay.
Yes.
Okay. So we produced 3,000, and then we sold out of the 3,000 we produced, we sold 2,000, right?
Okay.
So it means that we still have 100,000. We still have 1,000, right? We have 1,000 unit. Okay.
Yes.
Units.
Yes.
Okay.
Yes.
Now we want to know the cost for the 100,000 unit. The cost. So the formula to find the cost for the 100,000 is the closing stock divided by total production times total direct cost. That's the formula. So the total direct cost we have is 185,000, right? And then so
Yes.
1,000 divided by 3,000 divided by 1,000 divided by 3,000 times 1 divided by 1,000 gives you 65,000. That's the profit. Yeah. All right.
All right.
Any other,
Thank you.
any other question? You're welcome. Any other question, please? Okay. So let me give you, okay. That is the marginal costing. This we just reading, I just leave it. Okay. Okay, so with this information, try the marginal costing before I come in with the absorption costing. Try it yourself. I'm giving you, we are supposed to finish at 10, right? So that we can go to church, right? As we agreed, right? Hello?
Yeah, so it's
Yes,
6
dog.
more
Yes,
minutes.
dog.
Yes, sir.
Yeah, we agreed.
Yes, sir.
So
It's
11.
6 minutes more.
Yeah,
Yeah,
only
so,
6, unless we do
yeah.
unsubmitted.
No. So we can't do this. If we have 6 minutes more, we can't do this. Okay.
Yes, dog.
So let's use the 6 minutes for a short discussion. Somebody made a proposal. Please, who was that? Can the person come in? And then let's discuss if it's feasible. Because we've agreed on this time, and it's what we are doing, is helping us. So we have about 2 weeks, right? 2 weeks to finish. And we will finish within the 2 weeks. We've done 3, we did the 3rd week, right? Yeah.
Yes.
Yes, sir.
Somebody sent me a text. Please, who was that person?
Hello, sir.
Yeah, who? Yes, your name.
This is Joyce. That was Papa Sam. He sent you the message yesterday. He's the coach rep for the January intake.
And you are the course rep for who?
For June intake, last year, June intake.
So this is June and January combined class or what?
Yes, sir.
Is it a combined class?
Yes, sir, it is. For finance. So we have 2 badges doing the same courses.
Oh, okay. So we have the January and
Yes.
you had the June intake. Wow.
Yes.
Okay, so where is he? Let's or he's not part of the class? He's not part of the
He
class?
is. He's part, please, but I think he's occupied now.
So you can't talk.
Yes, but the issue is that we're supposed to have 2 lectures on Saturday, and the second lecturer is unable to meet us. So he's now proposing to meet us in the afternoon on Sunday, and some of our colleagues also suggested that we shift Sunday's class to Saturday afternoon. So we just want to know if it will be convenient for you.
I'm not getting you. Please, if you can come again. Please help me to understand.
So yes, we are supposed to have 2 lectures on Saturday.
Okay.
And the lecture we have in the afternoon on Saturday, he says he's unable to meet us on Saturday in the afternoon because he has.
So you mean you have not met at all on Saturday?
Yes, we haven't met on Saturday, but we do meet on other days. So some of our colleagues were suggesting if you could
who is the
shift
lecturer? Who is the lecturer?
Professor.
Mr.
Please
Akomeah.
1 minute.
Michael Akomeah.
Yes, Professor Michael.
So you didn't have a discussion with him. Okay, so it means that so all the 3 weeks
No,
you have not met on Saturday. All the 3 weeks.
yes, please. But he says he can now meet us on Sunday in the afternoon. But we want to know if it will be okay to shift your class to Saturday. That was the suggestion some of our colleagues made. And that's why Papa Sam contacted you yesterday. We agreed on the Sunday, but some of our colleagues were still suggesting if you could shift your class to Saturday.
So it's not the same class. It's not the same class or different class.
Yeah, it's the same.
With Professor Akomeah. It's not the same class.
Yes, please.
So what so that you move my class to Saturday, and then you bring him to Sunday.
Please, yes.
Yes, but
But
His will be
but
in the
but sports you are telling me
he'll be in the afternoon.
fine.
So like
But
we
my
have
point
we have
is
a free period on Saturday.
my point is my point is right from the beginning. Okay. Right from the beginning we had our lecture because we had because I was having class on Saturdays, right? So we have our lecture on Sunday,
Oh,
and then we be having
okay.
class on Sunday, and then for the past 3 weeks, okay, you also have another lecture, all right? So
Yes, sir.
so because you are not able to meet the lecturer, you want to move my class to Saturday so that you can meet him on Sunday. After. It's not what you are trying to tell me.
It is exactly the same.
So what you are telling me, if you are me and somebody telling you this, would you be happy?
No, sir.
Let's maintain this.
No.
We beg,
If
we
it's
do have.
possible, I will.
Will you be happy?
If
No,
it's possible.
please.
No. My
If
point
it's
is,
convenient, if it's convenient for
oh, yeah, very
yes.
fine. I'm talking about it, but my point is, from the beginning, the initial timetable was on Saturday, and then we had discussion with the management because of the crash to move my class to Sunday, and officially have been communicated to you, okay, that the lectures timetable is this from ICDU, not me. I didn't change it too because I discussed with them. I didn't have a meeting with you.
Okay.
Okay. And then they send the email to you and they send a copy to me. And I've been meeting your class for the past 3 weeks.
It's on Sunday. Okay.
On Sunday. You understand it? And now you are
Yes.
telling me because you are not able to meet the lecturer, the lecturer want to have the class on Sunday afternoon. So you want to change my class to Saturday. Fancy asema okay. Fancy me. And how would you feel? As a father, you are not relevant. What's the mechanism? I say,
Dana ukwa bia na e de ebe okay ba ye bisa say if ebe convenient dia say won peso dia ye beje atum na
and yes, I'm
suggest na
And yes, also, we are seeing.
what request I will make you know. You are making me feel like I'm not relevant. Me, I'm not important. That's how I see
Oh
it.
no. No, sir.
say
I don't want.
Oh, sir, please, this one there, we
Oh,
beg, don't go there.
menko pra say pacho.
Say,
But
Pacho.
We go our apologies. We are sorry.
what they me patrol it you? What they me patrol it you? Me per se what him ase. Enye me ka enye me opinion na the best. Per se one kasa wo ma me opinion say.
Hello, Doc.
No,
Oh yeah
sir,
me.
onim sisi ade
Hello, Doc.
ade na ode
Yeah.
to anim na eye adesrede. So
Hello, Doc.
say there were class be Saturday, but papa no ono so the same time no san wo or same so try first degree for the same time. So as a clash on his timetable to ntimi meet here. Enti ye bisa say Saturday afternoon eye ma But enye say ye adesrede de to anim eye ma wa na say instead say we be Sunday anopa no we okay say we be have class with Saturday afternoon ana. Oh, ebia Saturday afternoon me engage inti mo maintain me time here. Enye say bia wo nye relevant. Da bia ho de ntimi nko ho. Ho de no.
But we have to also understand where Dog is coming from, right? Because this thing was communicated to all the lecturers. So if
Yes.
Prof had an issue with it, I think he should have contacted the
Communicated it to
IC.
them.
Yes, he had waited for 3 weeks so before he's now communicating this.
That's ni nyina ya tini nyina say Sandra.
But nah,
But
this
yeah,
one
pese say be hu say as if say ono de oh e ho no de be we de ho kakra na ha me. As if say me
On Sumbo, yeah. On
what
Sumbo,
ɛhɔ deɛ sɛ nkɔ hɔ amma yɛ thought mu koraa nti ɛhɔ deɛ sɛ mpatwa ɛhɔ deɛ mfa nka ho
Okay, Doc is soon.
Dog with this row, yes, row back.
No, very back or baby Casa before very Casa. Say Sandra. Oh, Sandra, no do what it.
Hey,
No, only
Sandra, can we see your video? Sandra, I want to see your face.
No. I would sometimes when in situation I did not computer nature. I
want to see her face.
Sandra, me feel what So
Sandra, we want to see your face.
No, please.
No, Sandra will show her face to only
No,
me,
please,
not another person.
Yeah, say yeah, face to face. I'm who your face.
Sandra is in the washroom. Sandra is in the washroom.
So Nintia make us say Nintia make us Sandra Madonna say she's talking like she's not talking based on
like she's
her
in your
feelings.
shoes.
Like
Yes.
no in my shoes, like general opinion. Say for example, see I check that for I can't be any of you. 3 weeks. Okay. And then if something like this, we should have discussed at the beginning, initial stage crampo now, the chassis and the crampo. And but I first week, second week, third week. Now see because of that, you know, make class. It made me feel like because of this, and you know, make class to a year. It doesn't make it sound well to me.
That's it.
So what can I say? But Ebia, yes.
No, let him
please,
finish.
Please, you have a foreigner in the class, and you are speaking your language.
Sorry.
So you people have to pay. I have to charge all the Ghanaians. Each have to
sorry.
But if the request would have come like some conditions beyond control are happening seriously that we can't even have the class Sunday.
Oh, be a
What I say? What in American I say?
Oh, yes.
But what say? Let's always want to mean Shiamo. Time the man want to mean Shiamo. And Timber move me class no request me to move me class now for a year. Well, maybe no, I don't. Let me say, I don't want to maybe change it now. Almost one way. What in my class? Now, issue. I say, time the amount no, it's hard time way. You were supposed to teach at this time, and that is official way, you know. And one time. What in American I say? That's why I say I love what Sandra said that we should have discussed at the initial stage. Tama, yes, no. Or must consider all these factors, and then we will have the information from the beginning. And then I was asking you a question, saying you want to tell me, say for the past 3 weeks, no moon share and Saturday crampo that, and I'm saying, and I'm a within the week. Meaning you also having a class on Saturday air crashes. That is how I understand it. Like my class. But you see, we can still adjust and Jojo. Okay. We can still adjust and Jojo. But I didn't want to, let me say, change anything my own. Now I also have a pretty problem in the future. What's the matter? Yeah. So if, for example, it's like 2 weeks, right? And then when are we supposed to do the face-to-face?
Next week. I think it's next week.
I think next 2 weeks.
Joyce, is it next week? No, it's next 2 weeks.
I think it's next 2 weeks.
Next 2 weeks.
Okay.
Next 2 weeks.
So bet me I can slides and the videos and that.
No, someone recording what ICDU, they will send it to you.
Okay.
They record it, so they have the recording.
Slides in there, what that or there are
Slides, my shaman when you have all the slides.
Okay.
The lecture videos, they have it at the ICD, so they will share with you. Don't worry. You can, you can ask. The class can ask them. They will share with you and then share with the class member.
The first link we shared for the first lecture, can you use that for all the videos?
I'm not getting you, Joyce. You said
it's for us.
Yeah. Pacho, video recording normal panel. My link to get access to that. Into videos need now or link back on the show.
Okay. So, me pacho, Martin address it can.
I say.
Okay, that is fine. It's me so me pamocho, me still must pamocho. My proposal na mo dia ba. Okay. Mate, but next week, between Saturday. Some person we share Saturday, right?
Hey, dog, I ain't so on your person, no,
Oh,
your worship, sir.
Saturday, more class from 2. No, okay. Don't worry, I'll move that class. So this is what I will do. It's Saturday. Next is Saturday. Now,
oh, dog, it's like we are pushing you to the wall. Oh.
Someone, me say yeah, me need be account. Someone,
Saturday afternoon, calculations.
what time to what
Dog,
time?
the Saturday, some of
Yeah.
us you will not favor us.
This
Let's do 2
Sunday
weeks.
is okay.
Let's maintain the Sunday
Sunday is
morning.
okay, Doc. You're
Then we
maintaining
flow.
Sunday now.
Please,
Now
let's
okay. Now
maintain this
money
time.
prof is share time. Money prof share time.
Or Sunday, we are 3.
O Saturday come say you be 10. Saturday come
Eh, 10
10.
years to us.
Sorry, no,
Doc, eh?
Yeah,
Mobile
second
sorry.
chair service. No, one
Mobile
assembly. No.
sorry. Say by 2 no more. So
but Prof, Doc, they've forgotten that Ebimoso ye SDA4 since yesterday was no.
Because one year me
Sorry,
sorry.
sir. Just 2 months.
Let's maintain this a year and go because
So
calculations on hard.
Bro, please, let's maintain this.
I won't go.
Let's maintain this. Let's maintain this, please.
Let's maintain this.
Now me say okay, let's maintain our 8 to 10
Yes.
for the Sunday.
Yes, simple.
And then you meet Prof 3
Yes.
PM.
Simple.
Yes,
Simple.
3 to 7.
No.
Why? Mom try
You're meeting weekdays.
I can't 2 weeks. No,
You yeah,
Yeah.
Why?
Dog, yeah, that's so what's here. Senior Mishra.
Listen that Amen.
Okay, yeah, phone.
Hey, Joyce. Very
Pacho,
correction. Why next Sunday, second service?
It's about you sorry to Mammy Jamona. No more prepare right?
Joyce.
Have a nice weekend, okay?
Nice weekend to you.
To enjoy your day, okay?
Same to you, dog. Thank you.
Thank you. Bye.
Bye.
Joyce, soon said dog am a group work bio. I don't know, say more fear assignment bio. Last lecture
I met that in touch with him that magic.
Doc Ben Amokan was.
They were free.
Which one?
The one who just
yes, some of us we are not on the group.
But no, he hasn't given us the assignment. Also the Ben Mayin, but
about mine.
Munya Butare. And a strategic management from a group work bio and I'm a boy.
Yeah.
Group work.
Yeah, strategic. Last lecture, he gave us a group work.
Yes, Sandra, we share the groupings very soon. Why?
Okay. So they bear your rent fees. That's what I want.
I know for assignment in some come.
Maybe Sunny says Yaji.
Assignment Ben. Strategic management.
Gio. And then
on farm my I say more pray to.
On farm my man in the
group working it or the amay. When the lecture baby. Last Saturday, she and no say he had given us
Which
Which
assignment?
One can say you better
the Ben
not the Ben.
Oh, okay.
It gives me cry and chair no the amay.
Are we not in the groups already?
Or the
January
January for
the group January
No, I think Papa Sam betche groups are money January for no. Then I think Joyce betche groups are my.
and they say they are Joyce at that. Yeah, the last year group ni be you.
Sana me catch Papa Sam saying, "Come on, for last group in no see they be na election."
No.
We have groups already. We can just use
Already,
the same
we should
group.
maintain that. Please, let's maintain that groups, please.
You should talk to Papa Sam. I spoke to him yesterday, I think a couple of days ago. Or see they be na they're trying to say if he's creating a group for us, why can't we maintain? And I'm saying we have group already. Why can't we maintain our groups?
And so all we need to do is to tell him so say your groups that I say
Simple.
No.
Let's
Hello,
do that.
Joyce.
My people.
So I think we can maintain our last semester group. So the new intakes, you can just slot them.
Because we know ourselves already.
No. He wants a specific number. He wants a specific number of groups, so we can't go with what we already have.
Then let him and then channel when he brings it, we'll do it.
So very soon we'll share it. Send him a kind. We'll share it very soon. And Kenya Sanka will maintain the way now you want.
But just when me say bisa Master Jasam and say Biana, we have a previous group already, Anna.
Who say yeah, but number of groups of a dozen senior penalty we have
a dozen.
Besides, the emphasis ne man no groupings no.
So he wants to do it himself.
Okay.
Yeah, so we'll share it with you soon.
Papa, we not send baby.
I don't be in a hurry.
I'm go primo who go be.
And if you not on Giga.
I serious, Papa.
Yeah, some more.
School back quiet.
Oh, Joyce, but this semester, the lecturers are stressing us. Like the amount of homework they are giving us.
Hey, boot for boot, Papa.
Professor, anytime we should assignment.
Thursday, you shall call my assignment again. On my
assignment, and then so my assignment. Hey, yes, why?
I was saying, they do obey shame. Your mama assignment. Last time he said, anytime that you meet us, you give us an assignment.
No, please, a class rep in Kasawa. Say we are very busy people.
Yeah, assignment to any lecture Kasawa.
Why?
My areas too.
He doesn't give. I heard he doesn't give areas. He doesn't. They said even if you give him money, he will not take it. He will take the money after exams. You there, you be there.
Hey, I did where I say, oh my, on chair, so be a more my.
Why is it the professor? Professor Dana?
Please, I think the class is being recorded, isn't it?
Aye.
When the recording is not clear,
we have discussion.
What I have available is for
private discussions.
For Excel will be okay.
But don't worry.
I'm in the class. That's why I have lectures on Saturdays. So
and you'll be on class.
All the 2 Excels are finished. So what I have is 2 Excel and 4 Excel. So if the 2 Excel,
Sandra, we can hear your call.
You said what?
We can hear your call.
Hey, sorry.
Gina,
After 3 o'clock,
Hey, Iris Doomfe.
Iris, sorry, why? Sorry.
Your class was why.
Hey, Gazy, our friend is a pastor. Monso class. Sorry, Moko Bompire, my intimate.
I'm coming.
Yeah, so I don't know.